Yo, what's good, man? How's everybody doing? So, I've been looking at this whole entire Twitter thing and everybody talking about investment strategies and stuff like that. And, I know some real people in the space that are really focused on really learning and diversifying themselves. And I'm fully focused on doing these videos and trying to help them, accomplish their goals and their dreams. But I also see a lot of, what we say over here is a bunch of retards that really don't understand how the actual game goes. And I'm not saying it like, you know, in a bad way, but how money moves throughout the markets and how people could, diversify themselves and manage their risk and manage their portfolio, manage their money better than what most people are doing currently. And in order for you to do that, basically, we're going to have to rewind to at least 1929, basically the start of the Great Depression. And right here in front of me, I have this chart that's basically showing you what 1929 was. Now, I don't have the extended chart. I couldn't be able to pull that up at the very moment. But basically, from this peak to this peak, we fell down roughly around 86%, right? Market was completely wiped out. And I believe it took over 25 years for the whole entire market to be recovered. But this process right here knocked out so much generational wealth, so many people's hard-earned money and retirement funds and everything was wiped clean. So why was it so bad? Because people truly believed that the stock could only go up. They were so cocky and they borrowed crazy amounts of money just to go invest more, thinking that nothing can go wrong. And when you start, putting that two and two together, this was in 1932. Excuse me. 1932. I think I said 1929 before. So this was in 29 to 32. So that this whole crash happened within that time frame. But at that time, remember those dates that I just said. People were saying damn near the same thing that everybody's freaking saying right now with Bitcoin and everything else that's going on in this market, which we all see that it is most likely overblown. And we're gonna get into that chart later on with a chart called the Buffett Indicator, which is a pretty interesting indicator. Um, but people actually, believed and they just thought that it was inevitable for it to go up. So they did everything and anything that they can, especially leveraging their house and leveraging their credit cards, leveraging all types of debt. And when the music stops, you're gonna get crushed. So you got to be very, very, very careful. So let's move off of this chart real quick. Bam. So now we have this chart over here, which is the S&P 500, and this I believe was a Black Monday, correct? Yes. So the stock market basically that day dropped 22.6% in one day, the biggest one day crash in U.S. history. And what triggered it? The automated trading programs that no one even understood back then. When stocks started slipping, the bots went nuts, selling faster than humans could even react. And basically the Fed crashed itself. So this is this is dumb experimenting with the market. So I say this to let everybody know that they have machines, they have indicators, they have all types of things that measure human emotion and everything through social media and pretty much everything on this world, because we're connected to them, they're not connected to us. So they can build up a sentiment and understand what's going on, and I'll get into that in another video. But right now, we're gonna just stick to these fallen dates and everything. Um, and let's let's keep this pushing. Let's keep this pushing. So you guys are getting my drift right now. So this is 25%. This correction took a little bit. I don't have the exact date once again. I'm sorry for the lack of info on that part, but um, yeah, this is just. Let me see if I can grab that information for you guys real quick while we're going through this. But now this is basically the dot-com bubble. So we Nasdaq basically went up, and this was basically a tech bubble. So everything almost fell about 77%, and it took damn near 15 years to get this whole entire thing back. What happened on this one? The same old mistakes. Believed that tech stocks can only go up. People dumped their money into it. Random companies had any random company that had a .com or anything in its name was basically the best thing in the world. And we seen this in Bitcoin and AKA the cryptocurrency world with altcoins and everything else. Like those came out and everybody thought it was the next Bitcoin, and it turned out to be not. And these are symptoms that we go through as humans, and people got to really start correlating these things to the market, especially when you're trying to invest, because you want to be at your best point and you want to make your best buys. You want to maximize your gain, you want to maximize your profits. But in 2008, which I don't have that chart, the S&P dropped about roughly 50%, and at that time it was about $8 trillion that left that market. The why on that part is a little bit complicated, because there was a lot of financial products like mortgage-backed securities, and a lot of stuff in the real estate market and housing market that I truly don't deal with. But it was a complex thing for people to kind of understand. I kind of say this thing right now for like the MSTR holders and the Misty holders and whatever shitcoin that's pretty much with holding Bitcoin and trying to save their company because they think that is going to happen. But let me see something after this. What do we have? So this one's actually a good one. Everybody knows this one. I'm pretty sure everybody in this space knows this one. This is the 2020 COVID crash. This was the fastest 30% drop ever recorded, like in the history of markets. This dropped 30% so fast. And by the way, this is the S&P 500. I'm sorry, guys. But this dropped so fast, it was full on panic. And, people who bought the dip got it. And yeah, you can look at it in hindsight and say, yeah, I did good and everything. Yeah, I got you. Point of this game is to learn how to keep the money. Making the money and everything is easy, and whether it's the market or anything, you have to learn how to keep the money. You have to have a disciplined trade plan or a trade setup, or not even if you're a trader. Everybody's a trader. Realistically, you're gonna sell one day. You buy and you're gonna sell one day, so that's a trade. So when you get it and you start understanding certain things, you'll be a little bit more diversified, a little bit more knowledgeable on how you're going to deal with your portfolio these days, because this is your guys' future. It's not my future. It's not any of these profiles' future who you guys talk to on social media or anything. This is your future. You guys are following people blindly, and you need to really be focusing on how you're able to grow your portfolio and be able to put you and your family in a way better position. And there's a lot of options. It's not just Bitcoin. I am one of the Bitcoin maximalists and maxis and stuff like that, but I'm considered I would basically say smart money, because I understand what the market is doing, as opposed to how I see everybody just throws away money into the market and they have no clue. They zoom out and they're just like, with their own perspective, they zoom out and they're like, oh, it's going up to the end of the world. And it's like, I just hope you're prepared for whatever times, because all it takes is one bad news event, just one bad situation, like out the blue, like a COVID situation, for us to just, go through things. So, I wanted to show you these markets and stuff like that, because basically I want to tell you guys how you can like diversify yourselves and try to see if you could what's the best word for it? See if you could save your wealth. I know you guys are in the process of accumulating wealth, which is completely different than saving your wealth, but it's a all around inclusive thing. You have to be able to do it all, because if not, when the money does come into your accounts, what's going to be the plan? You guys are just like, what? Even right now, I ask you guys what's the plan, and you'll be like, what is the plan? I just sit in fiat right now? And it's like, well, if there's an opportunity to sit in fiat, yeah, you should take that. If there's no opportunity in Bitcoin at the current moment, but you having a biased opinion of it going up or down, then yeah, you better be careful. So I want to give you a couple of major warning signs that basically what happens in markets that could start tanking them and start looking for a real correction within the market, especially when the market starts becoming a little bit overblown, which we're going to go into that Warren Buffett indicator, which kind of gives you a little gist of it. You got to use a little bit more spice in your life, but it hasn't failed so far since it's been up. And these are just things that you could use and add in your tool belt so that you could make better decisions while you're out here in the game. But one thing you guys want to look for is overvaluation. When the total stock market is valued gets higher than the size of the real economy's GDP, that's a huge red flag. Look up the Buffett indicator, which I've been talking about, and usually when it crosses 140%, we're in danger. But if you look at it right now, we're at 180%, which I have this thing right now. So let's just go to that. Where's my Buffett indicator? I don't got the Buffett indicator. Ain't that a bitch? But the Buffett indicator is basically sitting at 180% right now. And trust me, that is not looking good for the markets. Basically, so that's not looking good for the markets. Markets basically is looking overvalued. So there's also an excessive amount of speculation. People are speculating left and right. And usually when people start borrowing money, they don't have maxing out credit cards to buy bitcoins, meme stocks, houses, you name it, like anything, cars, everything. They start maxing out their credit cards because they think that they can't lose. It's about to get messy. Like, and these are just certain signs that you want to look for. And when people start throwing money into investments that they don't understand just because it's trending, that's another sign that there's big trouble around the corner. Another sign is basically when you're sitting at the barbershop or with your little Uber driver or whatever the case may be, and they're giving you investment advice. And another thing that you need to look for within the market is called market euphoria. You hear it everywhere. It's like, oh, this time is different. It will never crash. Stocks only go up. Bitcoin only goes to the moon. Non-stop headlines, news highlights every day. Everyone acting like the stock market genius and stuff like that. Like these are all consistent signs of you most likely approaching a top or even worse, maybe a bubble. Then also crazy volatility. A lot of people don't understand that because they're kind of used to getting smacked up and down in Bitcoin. So they're just like, oh, yeah, I'll hold it. It drops 80%. I don't care. I'm buying more. Like, bunch of people who don't have or low IQs and stuff like that. But, usually when there's crazy volatility, there's huge swings up and down. There'll be big green red days, big green days followed by big green red days. And we've been seeing this all throughout the market. We've been seeing this, red, green, red, green, red. We're watching this play out fully. Now, once again, green, most likely red. Like, this is how the market shakes and bakes and gets you guys out of, and then the news comes because you guys react to the news. So the news comes. I react to the charts. So we'll always be ahead of the game because the charts really move the market and the news gets built around the charts. And that's definitely for another video. But when you see all four of these signs, you don't want to have to guess what will happen. You can just basically say that we're approaching the top and you guys should be either selling or looking for diversification, places where you could put your money. Now, let's get into a little bit of like the market psychology or how market crashes and how people lose money. The real killer about everything is emotions. Like I keep telling people with trading and everything like that, the emotional part of this whole entire game is what it is. I can literally give you my charts and tell you every single play that will make you money. And when you put your money on that play, if that play goes 2%, even though it was correct, even though you were going to get paid off of this play, if it goes 2% in your direction, are you able to withstand the emotional trauma that you're receiving from that price swing? And that's something that, as I would basically say, skilled traders, that's one thing that they had to really learn is mastering their emotions in this game. So That's number one, how people really get wrecked. Number two is basically FOMO, fear of missing out. If a lot of people don't know what that means, you see everyone else getting rich, you chase after whatever, pretty much is pumped. And I see this all the time. Everybody's chasing the pumps. Oh, Bitcoin's pumping right now. Even right now, the people are fasting right now, waiting for Bitcoin to get to 100K. Yeah, we only 6,000 away from that, but there's a lot of liquidity above our head, and it might take us another week or two and stuff like that. And if that wasn't in your game plan, then shouldn't have took that bet. So that's more of a fear of missing out or something like that. Or basically, wrong moves, wrong movements. But also another killer of what people get wrecked at all the time is they ignore their own logic. You know it's a bad deal, but you tell yourself, if I don't get in now, I'm gonna miss out forever. And I hear this constantly, like, oh, just go in right now. It doesn't matter if it's a long-term play, just buy the all-time high. It doesn't matter, because by 30 years, it's gonna be $100 billion trillion. Like, it's so ridiculous sometimes. I think you guys gotta lay off the orange pills for a while, because it seems to be doing your brain some injustice, and I don't know what the fuck is going on in these streets. But you guys definitely like to ignore the logic. You also have a lot of herd mentality within these social medias and these streets. Like, the herd mentality is what really irks my nerves the most, because if you ain't doing smash buy Saturdays, then you ain't part of the game. And I completely understand a bunch of things, and that's just one aspect. Like, this happens in Nostr, this happens in Instagram. Like, I'm on all of these social medias, and I'm going through all of this throughout everything. Yeah, if you're not fitting the people's game plan that is boosting you up and making it happen, like, you ain't fitting in. But I could tell you one thing: when you're doing too much, you're doing too much, and usually don't end out too well. Something gets exposed, or something just goes wrong, or whatever the case may be, and people lose trust and they lose value within that system, and it's all over. And when the bad news finally hits, panic sell kicks in, and people dump everything, and at the worst possible time, you're sitting there thinking, yo, what the fuck just happened? And yeah, this is all stuff that you want to be prepared for. So basically, overall, you want to figure out how to protect yourself. And I'm gonna give you a couple of ways on how to protect yourself, and trying to stay safe out in these streets, especially in these investing streets. But the simple answer to everything is to diversify your risk. You can't have 100% of your risk within one asset, where you're most likely going to get smacked the fuck up. Like, you got to start being a little bit smarter. You got to understand what markets move and how they work. They're in categories. Like, the S&P 500 is a category, but there's also different type of categories, which we're going to get in. So learn from people who understand this game and understand everything. Stop reading books from people who are interpreting the Bitcoin white paper and publishing their own books and thinking anything. And I'm not saying anything bad to anybody out there. Shout out to all the book publishers and everything like that. Like, I commend you guys. Like, it takes a lot of effort to do that and stuff, but it is a perspective of what they view Bitcoin as, or any asset as. So you really want to follow the people who are tried and true, who have a lot of success within this game. A person that comes to mind for me is like Warren Buffett. Obviously, he is very successful, and when he makes moves, people be like, "Oh yeah, like he's going to fail." But in reality, the only person who's really failing is the person who's laughing at Warren Buffett, because he just made the move of his lifetime. And everybody thinks that they'll be able to outpace that. And sometimes it definitely does not happen like that. So basically, Ray Dalio came out with a portfolio thing, and I believe it's called the all-weather portfolio. And the best way to armor up and set up an all-weather portfolio is basically made famous by Ray Dalio, which is cool that he was able to put this out. And when when he put this out, I took a look at it, and I obviously didn't understand it at the time that I took a look at it. It took me a couple of years to come back and understand it. But like I said, everything is in like its own category. So stocks in itself, whether it be S&P 500, Nasdaq, all that stuff, all that is one section of the market. The other section of the market is like bonds, long term, short term, whatever the case you want, 10-year, 30-year, 40-year. Those bonds and stuff like that, that's another section of the market. Intermediate term bonds, that's another section of the market. Gold and commodities, those are two other separate sections of the market. So Bitcoin is also a new category within there. So you can add Bitcoin in there, but also remember that Bitcoin is also a high risk. So at the moment, so you guys have to approach Bitcoin with a high risk, and throw it into this portfolio and do as you please. Do as you please. But each one of these lanes, usually when it has a failure point, if it fails, you either could see the signs and you can start diversifying your portfolio within the other lanes, or you can get caught up in the wreckage and take that loss on that one lane. But meanwhile, you have another 4 lanes that are active and still making you money. Well, and 5 lanes, because you got to add in Bitcoin if it is proper for the risk appetite and the money management. So basically, when you're looking at stocks, you're looking for growth. When you're looking at the bonds, you're looking for deflation protection. When you're looking at intermediate term bonds, you're looking for stability. When you're looking at gold, and Bitcoin, you're looking at pretty much as a crisis insurance. And when you're looking at commodities, you're looking for another inflation protection type situation. So if you could learn how to build your portfolios between there, that would be, your best strategy on being able to preserve wealth and also build wealth at the same time. If you can rebalance your portfolio regularly, like once a year, once a month, even once a week. Like I wouldn't recommend once a week unless you're a little bit advanced. Same thing with even once a month. Like I would give it a little bit more advancement. But if you could rebalance your portfolio accordingly and understand what's going on within these dynamics and these shifts, I'm pretty sure you guys will make out like a bandit. And if you come out with a solid game plan, which a lot of people say this a lot, they're like, oh, buy low, sell high, and then you got the little dweeb in the comments that's like, it's easier said than done. Well, there's ways of you doing it, and if you study and you follow the right people who can teach you how these markets move and do things, then there'll be no guessing games. There'll be no gambling. It's just stacks. You're just stacking wins over time. Like that's pretty much what you're trying to accomplish. Now, there's another thing with the dollar cost average thing. So I hope a lot of people understand that. I hope that they were running that through ChatGPT and doing everything, because we didn't have ChatGPT at my time, so we had to dollar cost average on a piece of paper, and it blew my mind sometimes. But you guys got ChatGPT and everything like that. Dollar cost averaging up will bring your average price, your buy price up. Dollar cost averaging down brings your average buy price down. So these are all things that you want to be aware of. So when you're in the market, you want to get the best price possible. You do not want to just sit here and be like, oh, it's going up. FOMO. That's going back to the FOMO part, what I was talking about. You're going into FOMO. No, stay diligent, stay 10 toes down, and make sure that you stick to your game plan. Create your game plan and create a game plan that weathers all storms. It's going to take you a minute, and all game plans have to be tested, because you build something, you put it out there in the world, it breaks, and you got to readjust that and put it back on the road. So make sure you understand what the whole entire dollar cost averaging is. And real talk, the rich don't get rich by guessing. They just don't. They understand how these markets move. They understand how these crashes are coming. They understand everything about this game. And they have the money. The money that's propping this market up for us to be like, yeah, it's going up. So they set themselves up to win. No matter what happens, the world throws at them. Just because history don't repeat exactly, it does rhyme. So at the end of the day, don't think that we are not subject, especially that we've been kicking the can down since 2020 of all recessions and all issues and all. We've been changing definitions. We've been doing so much, and it sounds like a bubble to me, guys. And I could be wrong, and I hope I am wrong. But if I'm not wrong, I'm definitely 1010% ready for this bubble, because I understand that these things only happen. All these crashes that I listed to you were major crashes within the U.S. financial markets, and these financial markets took years and years to recover and to deal with these situations. People lost a lot of money, but a lot of people made a lot of money. So these opportunities that are being gifted to you and being blessed down to you guys is, I'm sorry for that music in the background. Like I said, I ain't fully ready for a bunch of this YouTube stuff. But yeah, so realistically, just be prepared, guys. Understand what you guys are getting into. Understand what you guys are investing into. Stay focused. And I'm going to get the hell up out of here, because I don't want you to hear the hood bumping their music and stuff, even though it's not the hood.